Welcome to Valley Home Vibes, the podcast. It's all about the sizzling hot real estate market right here in Phoenix, Arizona. I'm your host, GT Campanile, joined by Stray Kalyani and Laurent Abitbol. Thank you for joining us. Today we're discussing down payment assistance programs for home buyers. All right, let's jump right into it. So DPA, as we call it, down payment assistance, has become quite popular, particularly set for the past year, I would say, past 18 months. Interest rates have gone up. Home prices continue to trend upward ever so slightly. And so payments are pretty high. First-time home buyers particularly are struggling to get into homes, mostly because of debt-to-income problems. So that's where all your liabilities are maybe a little too much of your income. So this is a metric we use in lending to determine if you're going to be able to make your mortgage payment. So one way to help with this is obviously you have to find a home that's within your budget, but the down payment's this other component, right, of the whole picture of getting the money together to afford that 3.5% down or that 5% down, whatever it may be. This is obviously a pretty good chunk of change on, let's say, a $500,000 home. So most on your low down payment programs, conventional, say, starts at 3%. We're talking $15,000. Then there's closing costs. Mm-hmm. So DPA is really about giving, allowing people to get into a home that they want, giving them accessibility. And even though it isn't necessarily mean nothing down, right, it at least will assist with either the down payment itself or closing costs. So we'll get into some of those programs today. So let me just ping everybody here. Does anybody have any experience with DPA or have clients that are using DPA right now, and what are the challenges of DPA?
So I am currently having a client now that is using the DPA program. So this is actually my first DPA program for the community. So because as you know, a lot of my clients are business owners, so not a lot of them need assistance. But I have one now that do need an assistance, and it actually really helped him a lot. So as you know, a lot of these people that are working, that are W-2, they have a hard time saving up for, the down payment. So yes, to us, it's like 3% is not a lot, right? But 3% to some people are a lot. And so we are looking at Merit Club Part 2. So what people don't understand is thinking that, okay, so if I get my down payment assistance, they're thinking that they're just not paying the 3%, but they're still owing the whole amount of the purchase. Let's say the purchase is $300,000, right? They're thinking, yes, they're not paying the 3% of that down payment, they're still owing that. No, that's not correct. They're minusing the 3% from the PRAC. So you are not paying at 3%. It's forgivable. So that's what, that's a challenge, just trying to explain to them that it's basically free money, So it working out great right now. So he just had to come down with, closing costs. So closing costs for me, fortunately, I'm pretty good at getting seller's concessions for my clients. So we're getting closing costs paid for, and his down payment is paid for by the, down payment assistance program. So literally he's coming to the table with like $2,000 to get into a $300,000 house. $2,000. That's, everybody have $2,000, right? So, I mean, let me take that back, maybe not, but $2,000 is way better than $15,000, right? So it's easier to grab $2,000 than $15,000 to get into a house. So it actually helped people that usually cannot afford to buy a house more easily for them. It's attainable for them.
And that I think is definitely the big point here is that down payment assistance or DPA programs really give people, um, the accessibility to home ownership. So it's going to allow a
Mhm.
lot more first-time home buyers, right, to get into homes. It's going to allow a lot of people who just aren't able to save up for that initial down payment. It's going to give them some extra help. And what you were getting at earlier, Saray, is maybe a misconception out there is that you're absolutely right about people think that they have to pay the entire amount back. So let's say you have a $300,000 purchase price, okay, and your down payment is 3%. And that means that your loan amount is going to be $291,000.
Mhm.
So as a lender, we call that LTV, loan to value. That is your loan amount divided by your purchase price. From a borrower point of view, they're always looking at it in terms the down payment, so the inverse of that. So they're going to be seeing it as I need to come up with $9,000 for kind of my skin in the game, right? That's the down payment. What DPA does is, it could be a grant. DPA could be in the form of a loan. DPA could be in the form of, great many, a second. It could be in the form of maybe, different types of programs out there, great many things. But we're going to use maybe a grant in this example because they're very common. A lot of money out there, and a lot of money out there in the form of grant money. They're going to grant you this money, and it's going to be basically cover the down payment. Now,
Mhm.
that could be a forgivable grant, or sometimes they call them repayables, and then they're forgiven after a certain period of time, like say 5 years or so. But for the most part, you're not going to have to repay that loan or that down payment, that grant money, um, as long as you stay in the home for a certain period of time. And sometimes they're forgivable at the closing table, but you're not going to be paying back the $300,000. You're really paying back on your first mortgage
Yeah.
$291,000. So that I think a lot of clients do think that way, right? They think I'm not going to be paying back the entire 300,000. Only if you sell your home, right? In the case of where it's repayable, when you go to sell it. Now, forgivable, what do they mean by that? It means that, they'll forgive it if you stay in your home for a certain period of time. Sometimes they're forgivable at the closing table, like immediately. In which case, the nice thing about these is they won't count against you in, say, your debt to income ratio or in your mortgage payment, right? So it's helpful in keeping your mortgage payment low and helping you qualify. Laurent, are you involved with any DPA programs just from, with your clients, or have you used them before?
No, not really. No, I never use them, or I don't really get involved in that. Not really.
Insurance has no role in this kind of thing.
Right.
So
Well, so part of closing costs, so insurance, right? Would so because remember DPA program, it's up to $20,000, and you could actually use it for down payment assistance or closing costs, right?
Right.
So would Laurent service be included in as a closing cost?
It's part of the escrow. I mean, the escrow, they have to pay the taxes, right? They have to pay taxes up front. Usually, what, 9 months, I believe?
Mm.
GT? How much they got to pay the whole year up front, usually, when they buy a house?
12 months.
Well,
So usually they'll ask
12
for an
months.
entire 12-month policy. Yes.
Okay, so they got to pay 12. No, for the taxes.
So for taxes, so here's how taxes work. It's complicated. Typically, what they're doing is they're collecting a little bit up front to fill the escrow account, and that it depends on what time of the year you close and how close
That's
you
right.
are to the billing period.
Right.
It could be 3 months. It could be 6 months, right?
Right.
So typically, they're going to fill your escrow account just so that when you do start making your mortgage payment, it's caught up. So when the bill is due, you have enough in there to make the tax payment.
Okay. So, that's part of the closing cost. So the taxes and insurance, they said the 12 month as well of the premium. So all that will be calculated into the escrow.
So it's a possibility that you
Right.
might be
It could cover.
seeing this.
Mm-hmm.
It
Yeah.
could cover, but because you're not really involved with the like the closing part, you won't know where
Right.
that money's coming from.
That's
So
right.
you just know that, hey, it's closing costs, it's paid for it, but you just have no
Exactly.
idea who's paying for it. You just
Right.
know that the bill is
That's
paid.
it. The title censors the check. That's all we know.
Yeah. So, but guys, just so you know, so homeowner insurance is
Hmm.
part of closing costs, and the seller's concession can pay for that, or the
Yeah.
DPA program can pay for that as well because it is for down payment assistance and closing costs.
Yeah.
So I'm just bringing up some first-time homebuyer programs, and many of these are DPA related. So remember, DPA doesn't necessarily mean first-time
Down
homebuyer
payment,
program.
yeah.
Anybody can actually take advantage of a DPA program if they allow you. A lot of them do have restrictions. Some of them are just for first-time homebuyers. But we're seeing more and more of these down payment assistance programs being made
Hmm.
available to all comers. Anybody who wants to or needs help, covering that down payment. Now, let me cover what defines a first-time home buyer. So, as long as you haven't bought or owned a home in the past 3 years, you will be considered a first-time home buyer. So, even though
And
you've
your
owned a home,
spouse.
in the case of FHA in particular, absolutely, there are obviously if you're in a for instance, we're in Arizona, and so this is a community property state. Whatever your spouse owns, you own. However, your spouse makes a
Hmm.
decision is usually connected to you in some way. So you're probably going to be considered a homeowner if you were never even on, the loan or possibly not even on title, right? They're probably going to connect you as being a homeowner. But for the most part, if you haven't owned a home or you know, um, purchased a home within the past 3 years, that's what classifies as first time home buyer. So some of the programs today that are DPA fall under FHA. That's the most common. And these are usually, they're calling themselves like grant, right? Forgivable loans, meaning that even at the closing table, they may forgive the loan immediately where you don't pay it back. So it's kind of a strange thing to call it a loan since you're actually not going to be borrowing any money because it's going to be paid off immediately with basically a pool of grant money. But some of them you do have to pay back. And this is the difference between what we call forgivable, right? So it's forgivable whether at the closing table or forgivable after you've lived in the home for so many years. And some are called repayable. So a forgivable loan that may have a stipulation, a forgivable DPA loan that has a stipulation that you have to live in the home for, say, 5 years, and then the loan is forgiven. What that means is it is repayable in that first 5 years if you sell the home. So if you sell it, that's going to come out of your equity, right? Basically, it's going to be considered part of the loan money that needs to be paid back. But you're not making any payment on that DPA money during that first 5 years. It's only paid when you go to sell your home, and it's paid out of the proceeds of the transaction. Now, a repayable DPA would be they cover your down payment. However, you may have to repay that um, with there's like terms that might say, okay, you're going to repay this for so many years and then it's forgiven, right? You might actually have to pay into it. That may not be considered a true DPA, but it often falls under the categories of a DPA.
Well, it's an
But
assistance. So
it's
remember,
it's
down
down payment
payment,
assistance. That's correct.
it's assistance. It's to get you into a home. It doesn't mean like, hey, this is just free money. This is, they will evaluate, right? What kind of down payment assistance do you need? Do you need a forgivable? Are you qualified for a forgivable? Or do you just need, something where it's a low down payment, right? Where you actually pay them without having to pay interest on that 3%, right? So down payment assistance could mean a lot of things. Like GT is saying, it's You just have to find out what kind of program you are qualified for. So don't just have the expectations of like, oh, I'm going to come in and get free money. No, that's the reason why we're doing this, is to let you know down payment assistance could mean many different things. There's forgivable, there's, repayable, there's some that actually one, where you can't refi, right? So there's a lot of different kinds. So just make sure you know what kind you're requesting or what kind you're qualified for. But it's very helpful. Like for my clients, it's very helpful for them.
Yeah, and let me clarify the repayable option. So repayable, really what it means is that you're going to have to pay that when you go to sell your home. So it comes out of the proceeds, but it may not count against you in terms of mortgage payment, or any kind of down payment you're bringing to the
Mm-hmm.
table at origination. So, but over, let's say, the course of a few years, you want to move out of your home, that's when it becomes due. And a lot of these might actually come in the form of a balloon payment, which means that you may not make a payment for so many years, but then it's due at the end of a certain term. And maybe they expect you to refinance before then to get out from underneath what would be a second lien. So it's kind of wrapped up into the first mortgage if you plan to stay in your home, stay after 3, 4, 5 years, and you're going to refinance and pay it off. Okay, so I want to cover um, two concepts here with DPA, and that is, most people think in terms of down payment, but sometimes these DPA programs might cover closing costs. So it might cover
Mm-hmm.
your down payment and the closing costs, which are the loan costs associated with your loan, or either or. It might cover only down payment, or some just cover closing costs. So with the closing costs, they typically call them closing cost assistance, but they'll probably market it as a DPA loan just because people recognize the term DPA. And there's various amounts. So, usually I think people think of down payment assistance as just covering that down payment, but it's only up to a certain amount typically. So if, your down payment requirement is like, 10%, let's say like on a second home, you can't use it for that. Nor can you use them for investment properties. So typically down
Mm-hmm.
payment assistance programs are only covering the minimum down payment that you would find on conventional or FHA primary purchases. And so a primary home purchase is for, people who are going to live in their home as their primary residence. And those will cover between, 3 and 5%, because the minimum down for a conventional typically is 5%. Now they do have 3% down programs, and these are more special programs under Fannie Mae and Freddie Mac. And you'll see DPA, obviously falls within that kind of range. And then there are some that just cover, say, the 3.5%. They're strictly, you'll know that those are
Mm-hmm.
FHA when you see that 3.5%, because that's kind of what it's targeting. And so a lot of these, what's really nice about them is that, uh, like the ones that you're finding today that are coming out today, is they don't require you to be necessarily a first-time home buyer,
Mm-hmm.
or they don't require maybe. So for instance, traditionally they have, but now they might have several stipulations. One of them may be a first-time home buyer, but then they'll add like you have to have served maybe in the military, or you have to have served in, like as a teacher or a firefighter. So there are some programs out there that are kind of aimed at, maybe a certain, um, career field or a certain demographic. And typically, credit scores on DPA programs are usually a little more stringent. So I've seen them go down as low as 580, right? Kind of aligned with the FHA, which is the minimum down on an FHA is 3.5%. But typically they're going to start at 620 or 640, which is more in line with conventional. Most of the programs that I'm seeing that kind of offer these forgivable options are starting at like 620. So they do, like on the FHA programs, if you've had bankruptcy or if you've had credit issues, again, they'll follow FHA guidelines. So really, for some of the more nuanced stuff, if you think you don't qualify, you should call a loan officer and ask, because they'll usually follow whichever program guidelines that the grant money is allocated for. If it's conventional, it'll follow conventional guidelines. If it's FHA, typically it's going to follow FHA guidelines. So yeah, those are DPA programs in a nutshell, and they're growing in popularity. And there seems to be a lot more money, out there now allocated for down payment assistance. So what's a scenario you're seeing that borrowers could take advantage of in the DPA space?
So W-2, of course, right? W-2 employee, have the income that can afford the monthly payment. So a lot of people don't understand is just not the TBA program that is just paying for the down payment, right? But they're thinking that they could buy any house they want. That's not the case, right? So there is a price cap, right, on the DPO programs. Is that correct, UT, for the DPA program?
So
you can't go jumbo loan on it.
Again, no, jumbos won't qualify, but
Yeah.
it'll follow the program guidelines. So on FHA, it follows usually like a zip code, whatever zip code you're in, they're going to have an FHA like loan limit. Same thing with conventional. There's going to be loan limits based on zip code.
And there's no income limit, right? So it doesn't matter how much you make, you can still qualify.
So on certain programs, again, they're going to follow program guidelines, right? There's going to be a income limit, say for, like there's home ready and home possible. Those do have income limits, and they follow basically area median income. 80% of area median income is usually the cap. But on like say Home One, which is a program by Freddie Mac, they only require you to be a first-time home buyer, but there's really no income restriction.
Okay, so I guess in my experience, I would say, hey, if you are ready to buy a house, right, but you don't have the down payment, reach out to us. Let us help you analyze what you can afford, what we can do. That's what we're here for. So we won't know your situation until you reach out, let us know. I don't want you guys to not own a house just because you think that you can't own a house because you don't have the down payment or the closing costs. There's so many programs out there to help you guys that are, so that's the reason why there's program out there, is for people like hard worker, it's just that they have a hard time saving, right? But you're paying your rent, your high rent anyway, so we know that you can pay that mortgage if we find something as equal as what you're paying in rent now. So don't let the down payment fund stop you from owning a house. Give us a call. We help so many different people, so many families get into a house that they didn't even think that they were able to get into a house. So let me tell you this story about one of my clients. So the husband and wife, the wife won a house. The husband thinks that because of his credit is so low, you're not able to get into a house, right? But to get her off his back or out of his hair, he came to meet us anyway, not thinking that doesn't have high expectations at all. He's just thinking it's just to come meet us, make her happy, and basically let her tell her I told you so, right? But after the meeting with me and GT, we sat him down and we qualified him. So he was blown away. He was like, there was no way in hell that he would be able to own a house. But we were able to surprise him, got him pre-approved, and he is happy to tell you he's been a homeowner for a whole year now. And it's because he had a nagging wife to nag him to say, hey, you need to go meet Saray. Let's come down and meet Saray. And we got him into a house. Like I said, there's so many different programs, guys. We won't be able to help you if you guys don't come see us.
Yeah, agreed. Well said. I think for most people, it's what they don't know. And just go talk to a loan officer or a realtor. Reach out to us. We're happy to advise. And you'll be surprised on what you can actually qualify for. There's a lot of programs out there that are tailor-made just for maybe your individual situation?
Yep. So loan program and real estate matching you to a house is not a cookie cutter, you know. So not every realtor is the same. Not every lender is the same. So I am specialized in the challenging, you know. So GT and I, we're partners. We're team. We work together to get those challenging, difficult situation. Like I just told you a story. I have so many stories of us being able to get people into houses with challenges, you know, like different program, like our current clients, you know, great credit score, great income, but he can't save because, you know, he's just making ends meet. So we found a DPA program. Now we're in the process of getting him into a house. I think we're closing in 2 weeks. Um, so like I said, you know, we specialize in these. So don't be afraid. Give us a call.
All right, that's a wrap, folks. Reach out to us if you want to know more about DPA programs, or if you have questions about what kind of programs are out there to help you with coming up with those down payment funds, or even helping with closing costs. Or if you just have questions about buying and selling a home, you can reach out to us. Please use the contact info below. All of our contact info is in there. And lastly, don't forget to click the like button and subscribe. All right, until next time, take care.